I've covered stocks enough to know that sometimes when something does a 10x, it means there is something to it, not that it's a bubble. Like most people, I think, tend to think if something's gone up a lot, it's a bubble. But actually, in the equity world, a lot of times it's actually telling you something's real.
Particularly when it's a network. That's the big difference.
Yes.
Networks tend to do this much more consistently.
Correct. So with our not great understanding, we did spend about 4 months doing a research white paper on Bitcoin. It's exactly what you said. First, we found that if you just did a very simple two-factor model, which is the number of wallets and then activity per wallet, it explained over 90% of the rise of Bitcoin. I think Bitcoin is still our favorite idea for this year. So we think it'll be the best performing asset class, even better than gold.
Bitcoin is under further pressure as investors are alarmed by market volatility, which has caused it to drop following recent highs. Tom Lee, a seasoned strategist and vocal supporter of Bitcoin, gives a crucial warning to cryptocurrency investors amid this slump. Based on past cycles, ETF flows, and post-halving trends, Tom offers a compelling new prediction for the future of Bitcoin. Many people are wondering what will happen to Bitcoin now that it is down roughly 10% over the last several weeks and is hanging around $72,000. However, Tom Lee is unwavering, citing what he believes to be an impending surge of institutional capital of up to $400 trillion that has the ability to completely transform the digital asset market. In this video, we dissect Lee's most recent forecasts, the evidence supporting his audacious claims, and the reasons he thinks the upcoming months may see Bitcoin enter its most rapid development phase to date. Please remember to like this video, subscribe to our channel, and enable post notifications if you have a strong interest in learning about the future of finance and the function of digital assets like Bitcoin. This will ensure that you never miss anything. Thank you and enjoy the video.
I think the story arcs are pretty bullish right now. From the shorter lens, this incoming administration, I think, is doing things that look very disruptive at the moment, but I think structurally are really positive because it's a path for U.S. deficit to normalize. And I think, indeed, I think animal spirits are coming back, even though things like these consumer confidence reports don't show it. And we know that there is tangible drivers of productivity, including AI, in front of us that justify, investors allocating capital. And of course, there's still plenty of disruption ahead, including crypto. I think Bitcoin is still our favorite idea for this year. So we think it'll be the best performing asset class, even better than gold. But I think anchoring all of this is a demographic story. I can send you some charts later, but if we look at the number of people aged 30 to 50 in the US, that's actually been steadily rising since 2009. It actually went positive in 2016. And what I mean by that is the number of people aged 30 to 50 matters in an economy because they're the ones that are driving both credit consumption, but also productivity, innovation. Yeah. And then there's a contrast because, as you know, in the rest of the world actually has a depletion of population. And so that's creating the demand for AI workers, which is what the US tech companies are producing. So I think that this does feel like it's going to be a very bullish equity cycle ahead. And that's why we're constructive. And it's been a rough start for this year, but I think we're just sort of getting through some of the kinks and burning off some of the recent bullishness.
Where do you think we lie on this? Is this an overbuild and everyone's going to write off a whole bunch of capital? Or is this still too early to say?
People who are going to call the top in data center demand have never really experienced industrial cycles, right? Because the cycles actually are going to extend until return on invested capital is well past negative. And I would be very surprised if we're already reaching that saturation now, because we know that any model today would have improved capabilities if you improved computing power or capacity. So we aren't even experiencing the negative side of that utility yet. So I think that it actually would still argue that you need to be investing more capital. We did spend about 4 months doing a research white paper on Bitcoin. And then in 2017, I remember just, for some reason, I think I saw the price of Bitcoin again, and I was like, whoa, this thing just went 10x in just a few years. And so I've covered stocks enough to know that sometimes when something does a 10x, it means there is something to it, not that it's a bubble. Like most people, I think, tend to think if something's gone up a lot, it's a bubble. But actually, in the equity world, a lot of times it's actually telling you something's real.
Particularly when it's a network. That's the big difference.
Yes.
Networks tend to do this much more consistently.
It's exactly what you said. First, we found that if you just did a very simple two-factor model, which is the number of wallets and then activity per wallet, it explained over 90% of the rise of Bitcoin since inception.
Yeah, and it also is a good approximation for Metcalfe's law. It's the best way I got of fitting Metcalfe's law to the network value.
That's right. And then, we realized that's exactly why social media networks created value. Because, I mean, the idea of like eyeballs and someone being the customer and then because it's free and you sell them out, like that was a very new concept. So to me, I had already believed in this idea that you could create businesses digitally that didn't start with a factory. And so we published our first report on Bitcoin. It was around $1,000 though. But we said that by using the same two-factor model by 2022, it could be $25,000. And that was either saying it was going to be worth 10% of gold or the number of wallets were going to increase.
Tom Lee is still very hopeful about the future of Bitcoin and is making one of his most audacious predictions to date. He thinks that enormous growth is imminent, and the behavior of prominent entities like BlackRock and other cryptocurrency behemoths support this belief. With more than 1.1 billion active cryptocurrency wallets by the end of 2025, Lee predicts that the long-awaited Bitcoin boom will certainly reach full force. According to him, the world may see the quickest wealth creation in history as a result of this quick adoption. Lee is certain, after years of in-depth research and market analysis, that cryptocurrency is poised to become the world's best-performing asset class, and that liquidity drives markets. To remain up to date on the most recent developments in Bitcoin, cryptocurrencies, and the digital economy, please take a moment to like this video, subscribe to the channel, and enable post notifications.
Of course, I was advocating for Bitcoin. We recommended 2%, but it wasn't something that we thought we would hang our reputation on. But it created immediate backlash for us with our institutional clients. So we actually got famously fired by several well-known hedge funds. But then I assumed we were probably onto something because I figured if someone...
Yeah, that's right. When you see that reaction, it's probably right.
Yeah, because if someone hates it, they haven't done the work.
Yeah.
And so now it's almost 9 years later, eight years later. And Bitcoin's obviously done really well. It's actually had cycles, and you've been involved for a long time too. I remember you told me you got involved like in 2014.
2013,
yeah.
I wrote the first ever macro strategy piece on Bitcoin in 2013.
Wow. Whatever that was the report John Norman saw. And that
might have been,
right?
Might have been. All the hedge funds, everybody passed it around because it became this thing of like, so I onboarded everybody from Dan Tapiero to Mark Yusko to, you name it, all the macro people was all because of me. John Burbank, you name it.
I might say that might have been your report, because I don't know why John Norman would have brought up Bitcoin unless it was spinning around his desk, The thing that is the most non-fungible,
That's
like
right. That's exactly right.
Yeah. Yeah, that's a good point, because you're right. We're going to be polluting and corroding so many human experiences, especially like with android robots and fake friendships. And, that was the post-2000 period was really interesting and you're hitting on it, because the bubble burst and it was a terrible, 2-year drawdown, maybe almost 3 years. But two really interesting things happened. One was value stocks actually ascended. So there was an ascent of a new class of stocks that really did well. But then in the middle of the center of where the bubble burst, where huge deflation took place, because all of a sudden fiber prices deflated and service and provisioning prices collapsed, that a new class of tech stocks emerged as winners. And it was the eBays and the Expedias, because all of a sudden their business models worked because fiber became cheap. And so you had high gross margin businesses, and actually the winners of the post-internet bubble collapse were internet companies, basically.
Tom Lee's message is clear when he considers the trajectory of Bitcoin and the larger economy. Both the cryptocurrency and equity markets have a bright future. He thinks that by attempting to lower the national deficit, the present U.S. administration is setting the groundwork for long-term fiscal health, even though it is causing short-term disruption. According to Lee, Bitcoin is at the heart of it all. He thinks it's a better investment option this year than gold. Lee began researching Bitcoin in 2017 and spotted early indications that there was something genuine underneath its meteoric rise. He noticed a network effect, much to what propelled the rise of tech firms and social media platforms when Bitcoin soared tenfold rather than a bubble. His research team even developed a basic model that predicted over 90% of the fluctuations in the price of Bitcoin by utilizing two factors: the quantity of wallets and wallet activity. As more people use Bitcoin, its value increases. Just like Facebook or Google. When Bitcoin was trading at $1,000, Lee had the confidence to publicly advocate it because of his understanding, predicting that it will reach $25,000 by 2022. Even though he only recommended a small 2% investment, Lee, however, never gave up. His conviction was supported by evidence, and history has often shown that he was correct. According to him, Bitcoin and the cryptocurrency industry as a whole are not merely erratic investments. Rather, they are a part of a significant change in the way value is produced and exchanged in a digital economy. Remember to like this video, subscribe to the channel, and enable notifications if you thought his viewpoint was helpful so you don't miss any updates. We'd love to know what you think about the future of cryptocurrency markets, so please share your ideas in the comments section. We appreciate your time and hope to see you in the next video.